Hey traders, in this lesson I'm going to be showing you how I created my follow the bear strategy script. It is a profitable strategy for the Forex markets. Full disclaimer, this is a curve fitted strategy, meaning that it is basically trading what would statistically be considered a random pattern, meaning that it's not a very robust strategy. System development and advanced statistical analysis of your strategy results is kind of outside the scope of the mastery course. I could record a whole course on that subject matter, and it would probably have more lessons than the mastery course. So I'm not going to go too deep into that in this lesson. I encourage you to go and research robust systems and what it means to have a robust trading strategy. But for today's lesson, just be aware that this is an example strategy. It's not perfect. It's not ideal. There is a very good chance that this strategy will stop working in the future. Not necessarily anytime soon, but over the years to come. The reason for that is that this strategy only works on one market, euro-dollar, and one time frame, the hourly chart, and only during a certain time of day, which is around the European market open. Now, it has been profitable over the past few years. I learned this strategy from Jason Greystone from Tier 1 Trading. If you don't know who Jason is, he's a great Forex trading mentor, coach, or whatever. I'll leave a link to his YouTube channel below if you're interested in learning from him. He's actually quite a great educator and he's legitimate. He doesn't sell scam systems or anything like that. He definitely encourages you to do the hard homework yourself, and he just kind of guides you through that process. This is a strategy I got from him when I signed up to his course just to check it out. This was one of the strategies he teaches there, and basically he claims to have learned of this pattern, this strategy, through a hedge fund trader. The hedge fund trader traded this pattern slightly differently to how we are going to be trading it, just because when you're managing tens of millions of dollars, you can't just enter and exit positions the same way we can as retail traders. You need to be a little bit more nuanced about it and scale in, scale out, that sort of thing. But the gist of this strategy, the kind of overarching theme, is that we're looking for a rejection candle, a large wick to the upside showing selling pressure and trapped traders, trapped buyers. And we want to see the buyers getting trapped at the beginning of the European session. So if I change my time zone here from exchange to, let's find London here, click OK. This strategy begins looking for this market pattern between the hours of 7 a.m. London time until around 11 a.m. London time. For me personally, I live in Brisbane, so for me this pattern unfolds between 5 p.m. and 9 p.m. And what we're looking for is, as I said, a rejection candle. We're looking for a shooting star candle. If I open up the settings to this indicator, we want the candle close to be in the lower 50% of the bar. So if I get out my fib tool and I draw from the high down to the low, we want the candle to open and close below this green line, this 50% mark. If the candle opens and closes below this and has a large rejection wick to the top, that is a valid pattern. We enter on the next bar open with a stop loss very tight to just above, a couple pips above the setup candle's high. And this script is set up to one target, so we're just getting a one-to-one risk-reward profile. The way Jason trades it is a little bit different. He uses a trailing stop, and so once, let's find a profitable example here. Here's a great one. So here is a trade that we entered on the open of this next bar after a large rejection wick during that time session. We pretty much immediately hit targets. This is an hourly chart strategy, so it took 2 and a bit hours to hit our take profit. The way Jason would trade this is he would trail his stop loss above the candle highs as the trade moves into profit until he gets eventually stopped out. I personally don't trade it this way simply because more often than not, when a strategy plays out profitably like this, it can go on into the early hours of the morning. So you can see down here, I would have had to be awake trailing my stop loss until 3 a.m. And I'm a committed trader. I love trading, but I love sleep more. And so I don't stay up that late trading the markets. However, because this is a simple strategy, it lends really well to automation. So in future lessons, we'll cover how you can automate this strategy. I do have a automated script running on this particular strategy through Pine Connector that does quite well. There are some catches we need to cover when we get to that lesson, but for now, we'll just focus on the source code to this particular strategy script, and we'll cover automating the strategy, adding automation to this strategy in a future lesson. But those are just some ideas to think of. Use this at your own risk. I'm not encouraging you to go out and trade this. Make sure to do your own back testing. Depending on the broker you're trading, this strategy may not even be profitable because of the different data feeds, the way candlesticks play out over time, over different brokers. But anyway, With all that said, let's get into the source code. All right, so I'm not going to write out the code line by line since I've already written the script. We'll just break down the source code line by line without writing it out. To start with, we just start our script off as a normal strategy script. We have a long title here and a short title. Overlays set to true. I have calc on order fills set to true on this particular script because it is a 1 hour strategy script that trades a high volatility pattern. Sometimes the same bar that you enter on can hit your take profit or your stop loss, and so I needed to turn this on. This creates a problem where the script can encounter a situation where the bar that you enter your trade on can hit the stop loss and the take profit on the same bar, and the strategy tester does not do a very good job of simulating intra-bar price action, and so it can, at times, count a losing trade that hit its stop loss and then its take profit as a win, so it might record it as a winning trade when in reality its stop loss was hit first, or vice versa. It could record a winning trade as a losing trade depending on how the bar played out and the strategy tester simulates that intra-bar movement. However, I did add some code to the script to highlight when that happens, so a big purple background color will pop up on your chart. That way you can drop down to a lower time frame and actually verify how that particular setup played out during your backtesting process. But I'm getting ahead of myself there. We'll get to that later on in the script. I also set initial capital to 10,000 US dollars by default. You can obviously change that in the properties tab if you want to. Moving on, we get a whole bunch of user settings. The first group of settings here is our risk settings for the strategy. That's our stop loss distance in pips. By default, it's set to 2 pips above the setup candle's high. And our risk reward profile is set to 1 to 1 by default. But you can obviously tweak that and see how different risk reward profiles perform. Next up, we have a whole bunch of filter settings. Most of these are optional, and these filter settings include the time zone we're looking to trade. You can modify this and it will affect the strategy performance slightly. I've found this to be the best time zone for this particular strategy, but if you want to, you could try extending the strategy. You could even try testing this on other markets. The original strategy that Jason Greystone teaches, the rules that he uses, which I don't use in this script, mine are slightly different. His rules did work on pound dollar as well, and a couple of other pound and euro pairs showed promise. So by tweaking some of these filters, some of the time zones, etc., you may be able to get this script to perform profitably on other markets. But for now, we're just going to focus on euro dollar to keep things simple. So the next filter we have here is our RSI overbought, oversold. I've got little tool tips here for everything. So if you hover over there, it says if true, if turned on, then the RSI must be considered overbought before a signal is valid. The RSI length is 3 candles by default, and the overbought level is 70 by default. We also have a couple of other filters here, like the previous bar must be bullish. So remember, this strategy is looking for trapped buyers. We are profiting off traders who are buying the European Open on euro dollar and then get trapped as the market reverses. So this is just an added filter that may increase the chances of capturing trapped buyers because the previous bar was bullish, a green candle. So the price action is going up and up and up, and then we get that big wick candle here, and then price reverses. All the people who bought here are trapped, and it can lead to a bit of panic selling and a short-term sell-off in the market. So that's what that filter is for. That's the idea behind that. I have it off by default because it doesn't seem to improve the profitability on this market, but it may with other markets. We also have a high filter. If this is turned on, then the signal bar must be the highest bar over the past X bars, in this case 10 by default. That's another filter, with the idea being we're trying to capture trapped buyers. Then we have our candle close percentage. I already went over that. That's our 50% mark. If you change this to 333, for example, now the candle must open and close in the lower third of the bar instead of the 50% mark. And that's it for our filters. If you turn these on or off, that will affect which days the script looks for. I found that Fridays were not very profitable at all with this particular strategy, so I've turned Fridays off. That's another good example of curve fitting a strategy to past data. But just for example purposes, I just wanted to include this filter because for whatever reason, this strategy does not seem to perform well on Fridays over the past couple of years of data. This could be completely random, or it could be a sign that perhaps the market behaves slightly differently on a Friday. Maybe the market participants that are moving the markets are behaving a little bit differently on a Friday, and the sell-offs don't seem to follow through on a Friday. But again, that could be completely random, and this could be an example of data snooping, data mining, a bad example of data mining. So keep that in mind. Generally speaking, day filters are not a great idea, but in the Forex markets particularly, there is something to be said for Monday and Fridays being a little bit different to the other days of the week, especially on a Monday morning in Australia when there aren't many US participants or European participants and there's only the Asian side of the world, the Japan and Australia and all the Asian countries, New Zealand. Those sessions seem to be quite low in volatility, so that can affect intraday strategies. But again, I'm getting a bit ahead of myself here in terms of system design and curve fitting, but just keep that in mind. It can be worth investigating how certain days of the week perform, particularly Mondays, early on a Monday when the Forex markets first open, and late on a Friday right before the weekend close. The markets can behave a little bit differently during those times than they normally do. Then we have our backtester settings. We'll get to that later. This is for the table that you see up here. Usually it's not showing right now because I removed that code. We'll add that code back in later. I wanted to leave that code out so I can show you how we can copy and paste it from the previous lesson where I showed you how to display backtesting results in your strategy scripts. I want to show you how you can copy and paste that code straight into this script. But moving on, we then get our RSI filter. So we get our RSI value and then we check, is the RSI filter turned off? Or is our RSI value above our overbought threshold? If either of these conditions are true, RSI filter is set to true. Then next up, we check our high and close filter. So is this bar a swing high? Is its high equal to the highest high over our look back period, 10 bars by default? This is turned off by default, so this will just return true since not use high filter would be true. Same with close filter, not use close filter. If that is the case, then close filter passes. It's set to true. Otherwise, if use close filter is turned on, we check if the previous bar closed higher than it opened. And those are all our filters, our price action filters. The next filters we have is our day filters. Now I have a custom function here called in session that takes a session parameter, which is a string parameter. And the string contains our time zone, so 0200-0700. That's the time zone we're looking for in our exchange time zone, which is Oanda's time zone, which I believe is New York time. I'll be wrong about that. It's some American time zone. So that is why I've set the time zone to 0200-0700 instead of 5 p.m. to 9 p.m., which is my time zone. You can specify the time zone in a session if you want to, but I haven't done that here. I'm just going off my exchange time zone where my broker is based. So this in-session function checks, you would have seen this function a few times now in my previous scripts. I use this function a lot for filtering certain time zones or time periods. What this function is doing is checking, is this function returning NA? And this time function will only return NA. If we hover over that, it'll say the time function returns the Unix time of the current bar for the specified time frame and session, or NA if the time point is out of the given session. So we want to check if this NA time function returns false, and it will only return false if the current bar's time period falls within the given session. And the session, remember, is our time zone, 0200-0700 exchange time, plus a colon, and then the days of the week. So the way that PineScript takes this information is like this. This function, when used in practice, will look something like this: time frame dot period 0200-0700 colon 2, 3, 4, 5, 6 is the days of the week. 1 is a Sunday and 7 is a Saturday. Because the Forex markets aren't open on Sunday and Saturday, I left those out. And we just have 2, 3, 4, 5, 6 for Monday, Tuesday, Wednesday, Thursday, Friday. And this days string here just adds all of these up into one string. So if the user has turned off Friday, for example, which I have, here this is ticked off, our session would look like this: 0200-0700 colon 2, 3, 4, 5. And there'd be no 6, which means that we are only trading Monday, Tuesday, Wednesday, Thursday. So that's what this filter here does. That's all of this code here. Adds up our days into a string, then adds that days string to our time string input. from the settings menu. And then moving on, we calculate the 50% mark of our setup candle. This is used to check if the bar opens and closes below that level. I've called it bear fib here just out of habit. It's not really a Fibonacci level. It's technically just a 50% level. But I've copy and pasted this formula, this code, from my hammers and stars code out of my library, the candlestick pattern detection code, and I've just left it as bear fib. You could call this anything, like candle midpoint, for example, might make more sense. But for now, I'll leave it as bear fib. Then the next thing we do is check all of our filters, make sure that they all pass. So are we in the given time session and the given days? And do we pass our close filter? And is the current bar higher than the previous bar? That's part of the strategy rules. The setup bar must be higher than the previous bar, and we must pass our RSI filter check, and we must pass our high filter check, the swing high filter, and the open cannot be equal to the close, so we cannot have a doji candle. A candle that looks like that is not a valid star candle or a rejection candle. We need a candle that looks a little bit more like that with a body to it. Once all our filters are passed, then we can detect if we have a valid shooting star pin bar pattern. Now, I've set up this strategy so that it only takes one trade per day or session. So if we enter a trade and it gets stopped out, this is probably a good example here. We have a setup candle, we enter short, our stop loss is 2 pips above the high, we get stopped out, and then on the bar that stops us out is also a valid setup in terms of opening and closing below the 50% mark. However, I found in my own testing that if the first trade loses in the session, the second one rarely wins. And so to reduce the drawdown, the max drawdown, I set up the script so it only takes one trade per day. And that is what this variable here, this VAR variable, is used for. It's called taken trade already. Have we taken a trade already today? It's set to false by default, but we obviously change that later on when we enter our trade. But before we enter our trade, we need to detect our candlestick pattern. So star is the variable that detects our setup, candlestick setup pattern. And it is set to, are our filters passed? Did we pass all of our filters? And is the current bar's closing price less than the bear fib, the 50% mark? And was the open of the current bar less than that same 50% mark? And have we not already taken a trade? If all of these checks pass, then we have a valid star rejection candlestick setup for this strategy, and we can enter on the next bar short. I should have mentioned this earlier, but this strategy only trades to the short side. It does not take bullish trades. I believe I tested the bullish trades and it didn't play out profitably, but I can't actually remember if I did that. So if you want to, maybe that's some homework. You could try adding hammer candles to this strategy as well and see how that affects the performance. But for now, we're just going to stick with the my version of the original rules, which is just going short using star candles. And that is what this code here detects. Once we detect our star candles, we obviously now need to calculate our stops and targets so that we know when to exit our position. So our short stop price is calculated by just adding our pip amount to the current bar's high. So if I open up the settings menu, that's this setting here. So 2 pips by default. This formula here will multiply the minimum tick. In this case, that would be 0.00001 multiplied by our pip amount. So that would give us 0.0002 or 0.0002. And then we multiply that by 10 to turn that into points. And then we add that to the high. That gives us our 2 pip stop loss. So if I zoom right in here real close and I get my measurement tool and click from the entry high here up to our stop loss, it should be exactly 2 pips. It's hard to measure, but this is exactly 2 pips from the swing high to our stop loss. The next thing we do is calculate our short stop loss distance. To do that, we just subtract the red line here from our entry. That gives us our stop loss size in pips, and then we can use that distance in pips to calculate our target by multiplying this by our risk reward profile. So by default, that's set to 1. And so once we calculate our short stop distance, we can calculate our short target price by subtracting our short stop distance multiplied by our risk reward profile. So by default, that's 1 to 1. So if we have a 10 pip distance from our entry to our stop loss, then we will have a 10 pip target because we are subtracting short stop distance times 1 in this case, and then that value is being subtracted from the closing price, which is our entry price. The previous bar's close is our entry price, and we place a limit order at that closing price so that if the next bar opens with a gap of any kind, we don't want to enter until price retraces to that closing price of our setup bar so that we get an actual one-to-one risk-reward profile or whatever risk-reward profile you set up in the settings menu. For example, if I set this to 1.4, you would enter short at the previous bar's close with a stop loss wherever it is and a target down at the 1.4 mark. That is how this math here works. Sorry if you can hear all that rain in the background. We're getting a lot of rain here. This week it's been raining for the past 2 weeks straight. But I need to keep recording these lessons, so sorry about that if you can hear that and it's distracting. Anyway, moving on, we then need to save our stops and targets for the current trade. So we use 3 VAR variables, persistent variables, T-stop, T-target, and T-entry. They're all set to 0.0 by default, but we override that whenever we detect a valid shooting star. We can then override these variables with our stops and targets. We enter short and we generate an alert. So if we have a valid setup, star candle, and the bar state is confirmed, so the bar has closed, then we have a valid entry. T-stop is set to short price. T-target is set to short target price. T-entry should be set to closing price of our setup bar. Taken trade already is set to true, and this is only reset back to false once we exit our session. So our red background on our chart, once the first bar prints outside of that zone, we reset this variable to false, and that allows us to detect the next setup on the next day. Then we calculate our position size just using the simple method here. Go and watch the calculating position size lesson if you haven't already. That explains what this math here is doing. But this is calculating our risk per trade, our position size, as a percentage of our account balance. So 1% of a $10,000 account by default. That gives us our position size, and the strategy tester then gives us a slightly more accurate net profit percentage and max drawdown percentage, as opposed to using a fixed position size, which is not recommended with any Forex trading strategy that I use. All of my strategies use a fixed percentage of my account balance, and as I've mentioned several times in previous lessons, this percentage of equity does not risk 1% of your account balance per trade. Instead, it just buys or sells 1% worth of your account balance. So in this case, that would be $100 worth of euro dollar, regardless of your stop loss distance, which gives you a tiny, tiny position size. We don't want that in Forex. In stocks, this makes more sense, but in Forex and crypto, particularly when using leverage, any market that uses leverage, you don't want to be using a percentage of equity. You want to use a percentage of your account balance based on your risk distance to your stop loss, so that you normalize your risk across all trades, so that a trade with a 10 pip stop loss is risking $100 of a $10,000 account, just the same as a trade with a 100 pip stop loss. Your position size grows or shrinks based on the distance to your stop loss. That's what this code here does. Once we calculate our position size, we can enter using strategy.entry. That will enter short. We specify the ID is short, the direction is short, we specify our position size, and we only enter short when our position size is equal to 0, meaning we are flat. So we don't have any trades already open. If we don't have any trades already open, then we can enter short using the strategy.entry function. And we should probably add this check to our filters as well, or our entry pattern here. We can say, and our strategy.position size is equal to 0. That way we won't override our stops and targets with a new position if we have a position already open. But anyway, once we enter short, we then generate a simple alert saying FTB, follow the bear. That's the name of the strategy that Jason Greystone, that's what he called it. Follow the bear setup detected, and we trigger this alert once per bar close. Then we check if we have exited the FTB session. So the first bar that prints outside of this red zone, once that's detected with this if statement, we reset our taken trade already flag to false, and then we simply draw all of the data, so our stops and targets. So long as we have a setup or we are involved in a trade, we draw our stop and our target onto the chart using the style line break plot. Remember, the style line break will break the line between trades. So if you don't turn your plot style to line break, PineScript will connect these lines to each other and you'll have lines drawing all over your chart. We don't want that. We want the line to break as soon as it starts plotting NA. And it plots NA when we do not have a position open and we do not have a setup. Next up, we plot a triangle, a red triangle above our setup candle using the plot shape function. And then we change the background color of our chart to red with 80% transparency if we are within the time zone that we are wanting to trade within. And then finally, we exit our trade whenever our stop or target is hit using the strategy.exit function. This runs on every single bar in our chart. It exits from the entry ID short. So this is our entry ID. This is our exit ID. And this exit function is exiting from the short entry ID up here. Only if our limit is hit, our take profit target price, or our stop loss is hit, our stop loss price. And we only check if our take profit, our target, profit target, or our stop loss was hit when we are involved in a trade. So when our position size is not equal to 0, that means we have positions open, contracts open. We want to analyze our stops and targets and see if either was hit. If we are not involved in a trade, we have an exit, and so this when function will, or this when parameter will return false, and this function will be ignored until we are involved in a trade. Anyway, that's it for this particular strategy script. That's the core logic of the script. It's quite a simple strategy, but as I've mentioned, can be profitable on Euro-dollar with the right parameters. We have a 50% win rate here, theoretical win rate. It won't be quite that high because of slippage and a lot of hidden risks and costs of trading, commission costs, etc. But that's with a 1.4 risk reward profile. If I set that back to 1, we get closer to a 60% win rate. Again, it's not going to be quite 100% accurate because depending on slippage, commission costs, you're not going to be getting a true one-to-one profit out of each trade. But this is just for demonstration purposes. It's up to you to account for that stuff in your own strategies and do your own homework, do your own backtesting and analysis of historical data and the cost of doing trading. It can be quite high, especially on a 1 hour chart, because you are trading position sizes that are quite large. It can incur a relatively high commission drag, meaning that your commission costs, the cost of trading, can eat into your profits quite significantly. Up to 30% of your profit could go to commissions on a strategy like this, in my experience with my broker. So keep that in mind as well. You really need quite a high win rate and high trade frequency and a good risk reward in terms of net profit versus max drawdown in order to turn a profit with a one-to-one risk reward profile. You definitely need close to a 60% win rate with a one-to-one reward profile in order to make money. So keep all of that in mind. But anyway, with all that said, that is it for this strategy. All that's left to do is add our little backtester display, the table up in the top right. So let's do that. The way I'm going to do that is I'm going to go to the displaying backtest results lesson in the mastery course. And then I'm going to scroll down to this left side, the backtester display code, and copy all of this code into my script. But I'm also going to make a couple of slight adjustments. So I'll skip that part. And then once I've copied in the code and made those adjustments, we'll break down what I've done. And of course, make sure to watch that lesson if you haven't already, if you want to know how this table code works. So I'm going to paste in my backtester display code here at the very bottom of my script. There it is. If I scroll up to the top, save my code, we should now be getting a backtester display in the top right. There we go. And it's showing our total return, our max drawdown, and our total trades and win rate, as well as some other metrics here. Notice that the total trades has a 3 with a little star asterisk next to it. That number there is how many trades hit the stop loss and the take profit on the same bar. And we need to go and investigate those trades manually when we're going through our backtesting process in order to confirm that those trades played out the way that the strategy tester recorded them. So if I zoom right out here and we scroll through the chart a bit, there's one there. See this purple line? If I zoom right in on this, you can see that this particular bar here is recorded as a winning trade. It hit our take profit, but it also hit our stop loss on the same bar. And the strategy tester does not do a very good job of simulating how that bar played out. It's very possible that this trade came up and hit our stop loss, then came down and hit our target, and then closed up here. And the strategy tester has recorded this as a winning trade when in fact it might have been a losing trade. So the only way to verify that is to use the bar replay tool and then drop down to a lower time frame and see how it played out. In this particular case, it looks like this bar may have hit our take profit first before going up to stop us out, just on the way this bar has played out. I don't know if I'll have enough historical data on the 5-minute chart to go down another time frame. I do. And again, even this bar here is a bit ambiguous. Still doesn't tell us which happened first, except that on this bar, it actually looks like price probably went up and hit our stop loss and then came down and hit our target. So I would record that trade as a losing trade. I would override the strategy tester in my manual backtesting process in the spreadsheet that I use. I would count that trade as a losing trade, not a winning trade. That's an example of what that's for. But anyway, let's open up the source code really quickly to wrap up this lesson, and I'll go over what we're doing here. So this code here is basically copy and pasted, note for note, from that lesson I just showed you. So go back and watch the displaying your backtesting results lesson if you haven't already to understand what this code is doing. But the slight adjustments I made here is first I extracted the won trade and lost trade if statement conditions from the if statements. So in the original code, this looked like this. If the win trades count on the current bar is not equal to the win trades count on the previous bar, that means that we just won a trade, and we increase our account balance by our risk per trade, and we increase our total pips, etc. We track our metrics. I extracted that if statement into its own Boolean variable. That's the only change I made here for this particular part of this code. The reason I did that is so that we could do this. This is the second change I made. So here we are declaring our error tracking variables for identifying how many questionable trades were detected. A questionable trade is the one I just showed you, where our stop and price target, profit target, was hit on the same bar, and we need to do some manual investigation to confirm whether that trade won or lost. So we have our questionable trades counter. It's set to 0 by default, and a Boolean value here, a flag value that tells the script whether or not to change the background color to purple if we detect a questionable trade. And we detect our questionable trades with this line of code here. This line of code says if we have won a trade or we have lost a trade, and the current bar's high is greater than or equal to our stop loss price, and the current bar's low is less than or equal to our target price, that means that we just won or lost a trade, and our stop and our target was hit on the same bar. This is a questionable trade. So we increase our questionable trades counter, this number up here, and we flag this bar to be painted purple so that we can visually identify which trades are questionable. And then I just simply added that counter to our total trades table cell with this toString function in square brackets with a little asterisk next to it. And that's it. That is the only change I made to this code from that previous lesson. And that brings me to the end of this lesson. As always, the source code will be below if you want to play around with this and get to understand the code a little bit more intimately, or adjust it, adapt it to your own purposes. Again, use this at your own risk. It is a curve-fitted strategy, but it has worked for several professional traders for the past few years, and that is why I feel comfortable sharing it here, even though it is curve-fitted for euro dollar. It has been profitable since 2014 or 2015, I believe, which is quite a long time for a strategy to work, especially one simple like this. But if you go through the markets, you'll notice that it is not profitable on 90% of these. So keep that in mind. It is not a great strategy, but it is a nice, simple strategy that lends itself very well to automation and beginner traders especially. It can be hard sometimes to enter your trade quickly enough to capture some of the moves. Sometimes price will just take off without you. But if you get good at entering your orders quickly, it is definitely tradable. I've been trading it for the past year or so, and I have been automating it on one of my accounts with some success. Not spectacular success. It doesn't take a hell of a lot of trades. It's not a high trade frequency, but I'll take an edge when I can get it. And it all adds up over the long term when you have a vast portfolio of different strategies and markets and time frames. going across different accounts. It can help diversify your risk and smooth out your equity curve a little bit in terms of your overall equity curve, not on a strategy by strategy basis, but on an overall portfolio basis. Anyway, I've been talking enough now. I need to go and drink some water. I'll speak with you in the next lesson. Take care.